All right, so we're here at the Real Estate Roundtable with IPRG. Today we have some guests. We have Alex Rabin and David Gomez from Peak. So welcome, guys.
Thank you, guys.
Thank you.
Yeah,
Sure.
Happy to have you here.
Happy to be here.
Tried scheduling this a few times, so it's great to have you in.
Busy guys, it's good.
Busy guys for sure. I mean, I was talking with Alex before we started this, and based on my numbers, there was an 18-month period, I think starting in the summer of 2021, where you guys bought 40 properties. So you're basically buying like 2 to 4 buildings a month, every month.
Wow.
Yeah. So certainly busy guys.
It feels like that was like 100 years ago.
Really?
Oh my God, yes. Yeah, because that was literally what was happening.
Yeah.
I mean, we're Rabin's out there hunting, trying to source every deal in New York.
Yeah.
He's buying, and then I'm having to take over and build it. And
I mean, there was times
like
you and I
4
would tour buildings, and I was, did you even sleep? Because you were constantly answering emails at midnight, 2 a.m, showing up to tours. It was impressive. It was something that we definitely talked about.
It's a full day job because you're touring during the day, trying to source deals during the day, and then at night it's like the only time that you can actually get busy work done. And we've been a very lean team. From the beginning, it started just as the two of us, and then, we didn't even really have an analyst till a year ago. So I was modeling pretty much every deal myself. So, we just kind of had to work around the clock and get stuff done. Now, we've grown to a team of 10, and have like a full kind of staff, which helps a lot. But, we're definitely working around the clock.
For sure.
So when you guys were going through this period of like, rapid growth and really ramping up and buying all these properties, so you were just out there hunting and trying to find deals and doing the walkthroughs, and then like you handled the whole acquisition aspect?
I mean, it's funny. So we started initially, when we first started the company, we both wanted to do acquisitions. And David actually had a broker background. I had, the more institutional kind of, private equity background, and acquisitions is the sexy kind of role that everybody wants to be in. And then pretty early on we made a divide where David was going to focus on the construction and like real operations of the company, and I was going to focus on the deal side of the business. And that was the best thing we ever did, because it allowed us both to hone in on both sides of the business, because you can't do one without the other. If you're not going to execute on the deal, then you're not going to be a great acquisition company. So that
So true.
Allowed us to really be successful, I think, by honing in on each side of the business and having a more wholesome company.
So, dude, it's such a good point. It's so true. We saw so many principals over the years really make the mistake where they were so good at acquisitions, but then they'd buy the building, and the whole like deal management and delivering the deal and just handling the process.
And the construction. We talk about that all the time.
Yeah.
Construction is like a huge part of owning buildings.
It's a good
yeah, I
point.
mean, I see it as the riskiest part.
Oh, yeah.
Of, buying is not the riskiest. It's actually, redeveloping and implementing the business plan.
For
And
sure.
that's why I think after our second or third deal together, we sat in a Starbucks in the West Village on Bleecker Street, I think it was.
Nice.
And we were having coffee, and I'm like, all right, if we're going to do this right, we can't both be upfront focusing on sourcing.
Mm-hmm.
You focus on that. You're really great at it. Continue to do that. I can't be with you, next to you at the front. I've got to be on the ground. I've got to be with jeans and getting sheetrock all over me and working with contractors on the ground. And so we just made that conscious decision, just kind of like to Alex's point, split up and kind of handle 2 parts of the business. And that's how Peak started. Just kind of 2 individuals, kind of as a joint venture of sorts, just coming in with different specialities and buying a couple buildings together. And then we brought in a legal partner, we brought in a project manager, so leasing partner, then we bought a capital markets partner. So, up until recently, really Peak just functioned more as a joint venture, a group of individuals, each with a different type of speciality in the business, that would just, we would all come together and take over a building, and then Alex would buy it, I would develop it, I would hand it off to asset management, and that's kind of how it functioned. And now we're in the process of really institutionalizing the business and trying to create a more wholesome business.
I think it's also the biggest difference between the growth of being like just an acquisition shop that's doing a lot of deals to becoming a real company. Because if you can show you can execute, the construction, perform on time, get it done on budget, not create capital calls, really asset manage buildings and run the properties, you can show your investors that you can actually get stuff done and make them feel comfortable, and that's going to make them want to continue investing with you versus, doing 4 or 5 deals with you and then them looking back and just being upset at, kind of what the investments that they made.
Yeah.
But like if they feel comfortable and they know that they can like trust you as an operator, that's the difference of becoming like a real institution and growing a company and kind of growing to the next level. As you were talking about before, we started with kind of these smaller like Queens deals where we were doing, $1 to $3 million deals in Queens, which, is an interesting thesis that we can, expand on. But,
Sure.
What really allowed us to grow, from those smaller deals to the larger deals is we had, private equity companies and larger, family offices and institutional investors that believed in our execution ability and that we can actually, get the project done.
Yeah, for sure.
Yeah, I think something that I learned as a broker too. I was fortunate enough to invest as an LP with different operators, and I'm sure you probably guys have done that as well. And you get to see the inner workings of different operators, and I think that's great. From that as a broker, you're able to do that because that kind of allowed me to kind of make note of the things that I will want to do and things that I don't want to do when I'm on the operator, when I'm wearing the operator hat.
Yeah.
And part of something that we've always at Peak really tried, due to Alex's point about getting investors involved, is we just want everybody to be involved, everybody to be a part of it, whether that's on the acquisition front and the sourcing front. Alex keeping investors and partners updated on the process, not just when we have a contract, or I sending out construction emails with videos and pictures and making it a more inclusive. We started doing that early on, but just sending monthly investor updates, and
I like that.
That was received really well. I mean, there's nothing more powerful than a few pictures. And nowadays, we all have a phone. No reason why any operator can't take a few pictures or a few videos and send them out to their investors.
Yeah.
And I think that transparency really made our investors feel very comfortable with our process. And at that point, then it just became a rinse and repeat formula on the construction and design aspect that everybody just felt very comfortable with us.
Did you have a background in construction design? Because obviously, Alex, I knew you before, and I know what your old job was. So I figured that you were the guy to raise capital and source that. And with you, I think you're doing a phenomenal job. I think the design is awesome. I think the construction's awesome. I think your rents are probably, although they're hard to see, they're probably awesome. So what was your background before getting into that?
Yeah, my dad was a general contractor, so I grew up in the business.
Okay.
I never thought that I'd be going into that construction business, but just kind of fell into it. So I think what that gave me is not the knowledge, but I feel very comfortable in a construction site. It just feels like home.
Okay.
And I think that just allows me to talk to people in a certain way, develop certain rapport with contractors that, kind of allow them to be very loyal to us and feel very comfortable with us. It's like, contractors and our vendors see me as one of them. And I think that relationship has allowed, a lot of trust between us and has allowed us to be able to develop 55 buildings in the last 2-3 years or so. Is everybody trusting that we're going to do our part, they do their part. The design aspect, I've never studied it, just very big fan of design. Always been a very optics driven person, like fashion, like art. And so then when we started buying our second building, I would sit there and just design like a little logo or kind of what the kitchen's going to look like, what the bathroom's going to look like. And the first 3 or 4 or 5 buildings were all different. And then on the 5th or 6th one, we landed on an aesthetic that we all really liked and was really well received by the demographic that we were going after. And one of our partners actually suggested that we should consider just institutionalizing that and really just replicating that design across everything that we do, because down the line when we have 1,000 units, it's going to be much easier for management, for maintenance to have all the same product, all the same floors, all the same kitchens, same appliances, same tiles. So then that's kind of where we started creating that rinse and repeat formula. And so then,
Interesting.
Then we just started coming up with like the names, and I would sit at night and just kind of create logos. I thought the black and white thing was really cool.
Yeah.
And then I would ask like, my mom's name, and do you have a daughter? What's your daughter's name?
Nice.
One of our attorneys, his son is Miles. I'm like, that's a cool name. Let's use
Miles,
Miles,
yeah.
like Miles Davis. That
Yeah.
works. And so Jude, our attorney's son, and Samantha, his girlfriend, and my mom, and my son Julian. So it just started off as kind of a cute little thing that then, now we have investors that say, hey, do you mind if you name the building, the Wesley or,
Nice.
or the Daisy or the sure, no problem.
People know the names. Though. Like,
People
I
do know the names.
I think Julie, you said Julian, and that's
Yeah.
Manhattan in
Yeah,
India, right?
Manhattan Avenue, that's my son.
There you go. I see that in my head.
Yeah.
So that's good. So do you ever have a problem like remembering all the names?
It's actually funny because I remember the addresses because I start with the building,
Yeah.
and then he changes it to a name, so he goes
Yeah.
by the name. So it sometimes gets confusing.
Yeah, but
You go by the name. I remember that during
go
a
by-
tour.
I only go by the names, and banks also go by the names. And
Yeah.
several of our bankers have told me that they love the name because instead of them remembering 4707 47th, which I think you guys told us, it's just easier to go, the Lorraine or the Lauren or the Lily or the Amber. So our general contracting team, our architect, we all refer to the buildings by names, and similar to our property management company.
I love
well.
it. I remember I toured you before we did the deal. I toured you through that building on Manhattan Avenue.
Yeah.
And your contractor was there, and you were like, "This is just like Samantha," and
Yeah.
it has the hallways of Samantha and the stairwell of Samantha. And I was like, "Wow! I mean, this is good." It was
It's
interesting.
great.
You don't hear that on tours.
No, and it's great because it allows them to kind of refer to different things and
Yeah.
understand pricing a lot quicker. So when I say, this building's got the hallways of the Samantha, then
Yeah.
in his mind he's already, I know the cost of that.
Yep.
That we can kind of like tie into the budget a lot faster.
It's interesting.
But yeah, no, it's worked out really well, especially now that we have 55 buildings to kind of go by the name instead of the addresses.
Yeah, and it's branded well, right? Like
yeah.
people want to. I live at the Samantha, or I live at the Julian. Like I like that a lot. It's interesting.
Yeah, I mean, people always ask, like, or you read in books and everything, like, what's the why? Why
Yeah.
do we do what we do? And at the end of the day, we're very fortunate. We get to provide people with homes.
Yeah.
Yes, our rents are very high. We've got friends who call us and say, hey, do you have any apartments? We're like, I don't think you want to rent from me because I
Yeah.
charge a lot.
Yeah.
But at the end of the day, we're very proud of what we do, and because people, as a dad, people raise their kids in our apartments. People will have sex in our apartments.
Yeah,
People
for
will
sure.
remember these apartments forever. So just being thoughtful about the design, being thoughtful about where you place the kitchen, how you place the appliances, where you even place the outlets, that stuff matters. Or at least I think it matters.
Oh, it matters.
It definitely
It definitely matters. We all
for
know
sure.
that an outlet that's placed in a weird spot, you're like, why did they place it there? Why couldn't I have placed it over there?
A well thought out apartment, like there's so many nice things about
So
it.
many
Like if
nice
it just
things.
functions properly instead of just like the outlet
Makes it
being in a
different.
random
But-
place or however
And it
people
doesn't
put these together.
And it just takes like a little effort. Just
But a
putting
lot
a
of
little
people
care
don't.
into it.
I don't know. I think a lot of people just aren't able to visualize like what a tenant needs or wants.
Well, that's an amazing point because I think a lot of syndicators, a lot of buyers, they have a really good head for buying deals and raising capital and all
Yeah.
that, but they don't understand the aspect of construction and layouts and all this stuff. And maybe their layouts aren't better. They wonder why is this guy getting higher rents than I am? And it all comes down to, I mean, Derek and I have a few investments and it's not our strong suit, and we've dealt with a different architect and different contractors, but we have a guy in our office, and he looks at plans, and he's like, oh, why the outlets here? Put him here, put this. And he can lay out an apartment like no one I've ever seen, and it goes a long way. And people think about that. So I think once you can get that understanding, I think that's why you're getting the rents you're getting.
One thing I want to add just real
Yeah.
quick is, I mean, we're selling some properties right now where this buyer is buying two buildings a block away from each other. Buildings are basically identical. They're the same. They're the exact. They're both 25. One's by 52. One's by 55. So practically the same. They're both 5-unit buildings. In one of the buildings, the way the units lay out, the buyer doesn't quite think it's a 2-bed. It's like they think it's a 1-bed. They're putting 1-bed rents on it. Versus the other building, they think it lays out as real 2 beds. It's a 20% difference in price that they're coming up with. So what the fund was basically saying is, not all units are like equivalent in terms of the rent that they project them getting. Even if they think it's like a real 2 beds, or the developer, the owner thinks it's like a flex 2-bed, buyers aren't necessarily going to see it that way, and neither are tenants necessarily. So it can have really big swings in terms of the value. And I'm sure that you're seeing that in terms of like tenant demand and the rents that you're able to achieve. It's just like if a tenant comes in and sees how well thought out it is, and like it just makes sense, and maybe they already know you guys, maybe they've lived in a different building, or they have friends who've lived in your buildings, and they're comfortable with like how well it operates, and they can just live there and be comfortable with it.
I think COVID changed that a lot. I mean, previously it was all about just doing shares and increasing density as much as possible so you could push the price per foot. But I think since COVID, people started thinking a lot more about their space and you know, they now a lot of people work from home. They want to have like a home office, and you know, we've seen a lot of people go from, you know, maybe taking a 2-bedroom, splitting it with 2 roommates, to having one and then taking like a home office. And I think, you know, a big thing that we've focused on really since COVID is making space like very livable. You know, it's not always about squeezing that extra bedroom in. It might be about having like very livable space that people want. I know that's a big thing. Like we go back and forth because I'm always, you know, trying to push the deal as much as possible because we obviously, you know, we want to make the acquisition and do more deals. But it's kind of a push and pull. It's like maybe we're not going to actually have like a real, you know, living room where people can actually like, you know, live out of and have a TV and sit down and hang out with their friends. Like, you know, that's important because if it doesn't, it becomes a very tweener apartment that doesn't lease very well. And also when you go to sell it, like people are going to walk in the apartment and be like,
turnover.
Yeah.
Well, we were speaking to somebody that owns a lot of units last week, and he first time I really heard someone mention it, but he's like, "Oh, well, this is one of those flex units. You know, like when people do the railroad units and they stick 2 bedrooms in the back, one in the front, and there's no real living space." He's like, "These are only good if it on really high demand rental seasons. Like the summer, you'll rent these, but in times when it's not great, you know, the units actually have the real layouts, the real living rooms, the real storage space. Like they're going to rent. So they actually, you know, there's a big difference between those 2 apartments.
There's a very big difference. And
Yeah.
we've also been fortunate that we have an in-house leasing team, right? So we're constantly meeting and we're constantly seeing, well, who's renting our apartments? What are they looking for? What's the feedback? You know, so I'll get on the phone with Amne and Cindy and I'll be like, who rented this apartment? Like, what do they do? Do they have kids?
Yeah.
How many kids do they have? How old are their kids? How much money do they make? You know, and you know, I'll tour after a building's fully leased. I'll go see it and I'll see how they laid their furniture because that's data for us to see how people, whether, you know, in the beginning we used to, you know, do a lot of kitchen islands, and then we realized that some people don't really prefer that because they prefer to buy their own furniture that's movable, they can kind of move around. So we stopped doing that. So we also work very closely with our leasing team and that data to kind of help us maximize our layout and our outlet placement and all that info. You know, at the end of the day, we see it as, you know, when I walk into my building where I live, I want to feel sexy, I want to feel accomplished, I want to feel good. But when I walk home, I want to feel comfortable. Mm-hmm. And that's where a lot of the design and kind of our aesthetic comes from. Feeling sexy when you walk into the building, feeling comfortable when you walk in home.
Nice.
So that's always been the kind of the
Hey,
motivation.
you mentioned the outlets. I mean, a lot of people in the business are like, well, let's just get it rented and then we'll refi and then forget about it. But that's the outlets and that stuff. Maybe they don't catch it on day one, the renter, but they're not going to stay in a place where they can't plug their stuff in. And I think it's all about longevity.
The turnover.
Management's if you don't lay out a unit right, you're going to have turnover and the management's going to be tough. So these are all really good points that I agree with, for sure.
Yeah, and I think there's a great compliment when tenants call us to say, "Hey, is this building going to be condoed?" And to us, that's the biggest compliment because
There you go.
you're happy, you're thinking about buying it, so that happens a lot.
Really?
So that makes us really
sure it
proud
does, yeah.
of the product.
I mean,
it's
just
condo level quality
For sure it is.
apartments. And
Got
so,
renovated.
yeah.
You know, everything is replaced. It's high-end rental product.
Yeah.
Do you guys ever think about doing condos?
We've thought about it.
Yeah.
and entertained. It's just a different game. I mean, the taxes are different. It's obviously more speculative game.
Yeah.
We've kind of been built on this long-term patient kind of mentality of you know, building, you know, good unlevered yields and holding long-term. But it's certainly something that's appealing to us because you know, we certainly have the ability to execute on the construction and buying side.
Yeah, or like ground up, right? Like the deal that we're doing together right now. I mean, you guys are going to do well there, obviously. But yeah, that's a big construction job.
Sure.
So after that, you could pretty much do ground up.
What about ground up? You guys ever think about that?
Yeah, I mean, we've thought about it, and we see it as a possible kind of like transition, you know, when the market is right. I mean, at the end of the day, we're opportunists, right? We saw an opportunity in the multifamily space during COVID, and we went after that. You know, 2, 3, 4 years, who's to say that, you know, there's opportunities and that Alex sources and ground up that, you know, we'll take on. So we've gone through the exercise of looking at a couple of ground up deals. They just haven't happened. But again, I think everything that we've done to date has also given us the confidence that you know, that we're going to deliver a good product that we're proud of. You know, Peak is important to us. The brand is important.
Definitely.
You guys are obviously big on location, so these existing structures are in great locations. Think about land. Obviously, God's not making any more of it, and the stuff that's not developed, like, is it the best location? The land that's still out there, I mean, location's important, and a lot of people, they really sacrifice location to get the right site, and it could be a problem.
Yeah, we've really focused on focusing on, specific niche markets, just because we don't, for operations, what we've noticed is there are a lot of operators that are kind of just buying deals everywhere, and that, like, we didn't want to be the guys that were just buying stuff because it was cheap and
Yeah.
not focusing on the exact market, because for multiple reasons. One, we just know these markets very well, but it's also just operationally, as we grow a portfolio, it makes a lot more sense from a construction perspective, from property management and asset management, to have the properties clustered together, for just one for the operations, but also, if we're ever to go to sell the portfolio, it's more about building a portfolio for the institutional investor that makes sense. And that goes back to the whole thing about the same scope of work. A buyer, that's coming to look at our portfolio when we're ready to sell and everything is stabilized, they'll see that all the renovations are exactly the same. They know exactly what to think from a peak product, and they know it's going to be clustered in these submarkets that, makes sense for them to actually own and operate, versus a portfolio where you have, assets all over the place and it's kind of a headache to own.
Yeah, that's really smart.
Really smart.
That'll definitely pay off for you guys down the road.
Yeah, I mean, we've walked away from good deals that are just a little too far away from kind of our main portfolio, and we always just think about from a construction standpoint. Sure, we'll finish it. It'll be beautiful, but then when management takes over, to have to fetch a super so far, and it's going to take him 2 hours to get to the building, 2 hours back. That's a problem.
Yeah, you get to a certain point as an acquisition firm where it's not like you kind of go into this thinking everything is about return based, and it's a great price per foot, it's cheap, or you're going to build this to an amazing unlevered yield. But there's other parts of owning real estate, right? There's the actual operation behind it, whether you actually really want to own this asset, and does it make sense for the firm, to actually buy it. And from an investment, does it work for the investors? Is very important. It's not just all about return, because if you do that, then you kind of build this portfolio that doesn't really make sense, especially if you're really focused on growing a company and owning these assets long term. If you're just trading them, that's a much different story. But if you want to be an owner and build institutional scale, I think you have to really be intelligent about the way you think about your company and the portfolio that you're building.
Mm-hmm. For
now
sure.
you build. Now you build. I mean, if we were in
Definitely.
the business of building and selling, we would build a lot differently than building to hold.
So back when you were buying all these buildings, you're running around doing the acquisitions, you're doing the construction, but the construction and how you think through how you're going to do this plays hand in hand to the rents that Alex can project and the value that he ends up offering to buy the building. So how much crossover is there between the roles when you're providing all the data or the insight for the acquisitions, and maybe the acquisitions is influencing I don't know, the cost of construction.
I mean, it's a constant communication. I mean, from the day that we're submitting offers, we're pricing out work with David. He's going to the site to confirm everything is on budget, and then it's a constant communication with the bank. Building out as we're going for loans and bidding out kind of the project. It's about constantly communicating through the project, and then learning from what he's seeing on the kind of floor and telling us, oh, this is getting more expensive, or we're able to push timing on certain things. Just keeping that communication is really important, because you got to keep adapting your pricing, because it's never going to be the same. Everything in this business is very dynamic, and you kind of have to constantly adapt. And that's a huge part of having a vertically integrated firm. I mean, we don't do property management, but other than that, we're doing leasing, we're doing, CM, and keeping, communication between all parts of the business is extremely important to be the best buyer possible.
Yeah.
I think something that at least I think we've done slightly different, I think, than some of our other operator friends, is that we've really tried to keep one standard across everything that we've done, and by that I mean the quality of materials, the construction standards. So we don't necessarily work backwards in the sense that, oh, this deal could work if we just maybe used cheaper floors or cheaper appliances or cheaper cabinets or cheaper tile. We've always just tried to shy away from that and just made our construction kind of speak for itself. So for that reason, to Alex's point, if you walk one building, you've pretty much walked all of them.
Wow.
Same flooring, so same costs, throughout everything that we've done.
And how about like locations? I mean, you guys, we spoke about this already, but you started in Queens, then you went,
Yeah.
it started a lot in Manhattan and Brooklyn.
Yeah, I mean, the Queens whole thesis was an interesting thesis. We really liked 3 submarkets in Queens: Sunnyside, Astoria, and Long Island City. And what we liked about those submarkets was, one, we really liked that there was no institutional walk-up supply. So you kind of had your large glass towers with 1 million amenities and doorman elevator buildings that were these like very high-end buildings in Long Island City. And then you kind of had your mom and pop owners for the most part in Queens that were renovating buildings, but nobody was fully gut renovating, rebranding, putting washer and dryers in units, split systems, fully upgrading electric, plumbing, intercom systems, redoing the hallways, condo level finishes in the kitchens and bathrooms. And we basically created a product that didn't exist in Queens. And that was extremely attractive. And 2, we just saw, especially you guys know, you were part of the whole Brooklyn craze. There was just a huge pricing arbitrage to Queens to Brooklyn. And it didn't make a lot of sense to us as a natural, both of us as natural New Yorkers. David grew up in Queens, I grew up in Manhattan.
Yeah.
Queens is literally on the other side of the bridge. And a lot of these neighborhoods were within 20 minutes of public transportation to Midtown Manhattan. And, it was just getting no attention, and it was a huge pricing arbitrage. So we were able to build a portfolio of, 35 buildings in Queens. And there just wasn't a lot of competition also that was really like seeing the vision that we saw in Queens, which I thought was both of us thought was a very unique thesis. And then we're continuing to do so. The one thing that kind of shifted our strategy a bit, one, we moved our office to Williamsburg. So we're, very heavily focused now on Williamsburg and Greenpoint, and we see that, as a market that we really want to focus on, because that's where a lot of the young, kind of professionals and want to be, and there's demand. But also there's just a lot of liquidity in that market, and that's the one challenge we've really seen in Queens is, there's not really quite yet a huge sales market. So, luckily we're comfortable owning a lot of these assets long term, and we built them to good yields that we can hold these assets. But that's kind of one thing that's really shifted our focus. So, as of today, we're really focusing on, prime Manhattan, Manhattan south of 96. Most of Northwestern Brooklyn, especially focused on Williamsburg and Greenpoint, and Western Queens. Sunnyside, Astoria, and Long Island City. Basically, markets that we think we can draw in the Manhattan prime, Brooklyn renter. As a value option to those markets. And, especially with a huge affordable housing problem in New York, Queens is a great place to create, really high-end affordable luxury housing at a price point that a lot of people, can't afford in Brooklyn and Manhattan.
Do you feel like that arbitrage played out, in terms of the rent you're able to achieve in Queens compared relative to, the price point versus the acquisition price point in Brooklyn and the rent you're able to achieve in Brooklyn?
Yeah, I mean, we've never really had a problem leasing. I mean, we've outperformed the market, dramatically, and we've continued to lease very well. The biggest, challenge I would say that we've seen is getting people comfortable with, even at high cap rates, our price per foot are high for Queens.
Yeah.
So it's just going to take time for that market to get more mature and people to see the vision of liquidity in Queens.
If the income is there and the yield is there, there's going to be money for it.
Yeah.
We've seen that time and time again in Brooklyn. So many investors get caught up on price per foot, but not all investors get caught up on price per foot. There's plenty of investors that throw the metric out the window, and they're only looking at what rents they believe in and the yield that they can achieve on acquisition, and that's where they'll buy.
And there's buyers for brands, right? You guys don't just have one or two buildings in Sunnyside. You have a package that looks the same, that's close in location, and that's something that you can market and sell.
Yeah.
And that's how we've tried to structure ourselves. We don't know when the date is going to be, but we tried to structure the company for a more institutional recapitalization or exit, and everything needs to make sense together, whether it's from a construction perspective or whether it's from the location, we want it to be a portfolio that, as an architect makes sense together.
Yeah.
Because ultimately, buyers are smarter now. People aren't just buying one-off assets. They want stuff that makes sense. And, a lot of the things that used to go by, like certain things like, people not looking at full taxes and things like that, buyers are just more intelligent today and more institutional.
So
and
intelligent.
you have to think what the next buyer is going to look at the deal, because otherwise you're just not going to be able to execute it at the right price.
The market is so sophisticated right now, and there's just so many things you need to know to be an investor in New York. Like there's all these like little pitfalls, and I mean it's just unbelievable. So yeah, the market is very sophisticated.
I mean, you and I were joking about this last week, but we've obviously done a lot of business with this one fund in particular, and we've learned a lot from them. I mean, they look at every little aspect of the deal, but it changes how we look at deals. If we go to price a deal, or if we're investing in a deal, like we're like, well, what about this? What about that? Should we get the structural engineer in? Like, remember what they said? Like, they're teaching us, and I feel like a lot of people are going to follow suit to them, and that they might be creating the new market of these investors.
I think that's an interesting point, because one thing that we've really learned is about just doing stuff ahead of time and just cleaning up stuff and hiring the right consultant. Like if the institutional buyers like that, we know exactly the consultants that they're going to hire, the things that they're going to start looking for. So there's no point of like beating around the bush.
Correct.
If you're ultimately going to get penalized by it. So you might as well be ahead of the curve and just do these things ahead of time and hire the right third parties, so that you can deliver something on a platter that's clean, and you're ultimately going to get paid for that on the back end.
That's the thing with New York. It's transparent, and these people aren't like geniuses. Like there's people for these stuff. Like you can hire a consultant, you can hire these different companies that are professionals, and a lot of people don't do
Hire
it.
a DHR attorney.
Yeah,
Tenants.
but you could literally in New York, you could hire somebody for every aspect of the job, and a lot of people don't do it. But
Why?
Why don't people do
Yeah.
it? They
cheap.
don't know. They're cheap.
Cutting
They're
corners.
I mean, it's exactly. It's also
Yeah.
expensive.
It's expensive.
But it's
People.
not that expensive.
I know, but it is. It adds up.
It's way more expensive not to do it.
Right.
Way more expensive.
These deals are, though,
For sure.
especially on the smaller, more mid-market deals, the deals are just very sensitive, and every little cost, changes your return, and everybody doesn't look about it, kind of the long-term vision of these deals, and, it's very easy to say, oh, I want to save and cut this corner and do whatever I can do to kind of, build to the greatest unlevered yield or IRR possible. But, sometimes it's better to just pay that extra cost and think about what, ultimately the next buyer is going to look at, and you ultimately end up, performing better because you did it.
I think a lot of it's just like laziness or lack of focus. Like people, I mean, everyone's got a lot going on. Like everyone's just moving so fast, and I feel like people are just like, don't worry about it. Like we'll gloss over this, whatever the item is, and then we get our hands on it a couple years later to sell it, and there's just all these little things that are not right, and it comes back to bite them, and it gives us a lot of headaches in handling the sale.
What David and Alex are talking about, though, which is good. I mean, you guys have processes in place, right? Like you guys have all the steps, and that's good. And a lot of buyers, I think, they're doing this for a business, right? They're making money to buy buildings. They're buying a lot at once, and you tend to make mistakes and rush things. But if you have the process down like you guys have, it makes sense.
Yeah.
But that's where we see it, right? People renovating 50 units at the same time. If you don't have the pieces in place, like you're gonna make mistakes.
Yeah, I mean, it's developing so many buildings. You're forced to get organized and create systems and kind of create a process versus the operator that just 3 or 4 or 5 a year. It's good, kind of a different attitude, different approach. For us, is everything's very systematic. Everything's very, very organized, because it's the only way to develop 20, 25 buildings per year. It's the only way. Otherwise, mistakes are made, and if you're not organized.
Yeah, it's really impressive to handle that amount of acquisitions and that level of construction at the same time, especially when you guys were starting up and the team was thin. It's just incredible.
David, do you go to all these sites, like in your car, and just to check in?
Absolutely. I have to. I mean, people ask me what I do for a living, and I say I'm a therapist and a babysitter. I mean, I'm a problem solver for a living.
Yeah.
That's really what the business that I'm in, right? I wake up in the morning and I think, okay, what's today's problem? How are we going to solve it? Because every day there's going to be a problem, and with an on-site, you have to make sure that, the principal of a company, you want to, I mean, I see your desk from here. You're sitting out with everybody else. That sends a message, right? You're here with everybody. You're working as hard as everybody else. Our general contractors, our vendors, our plumbers, they have to see me on site. They have to see that I'm not just some guy in a suit and tie sitting in an office writing checks. No, I'm on site with them. I'm get dirty with them.
Yeah.
If there's a problem, I'm going to be there to figure it out. And you just have to make it a point to lead by
Good.
example. And then I think that just makes it for a better team and a better process and less mistakes.
For sure.
Change orders in the construction business is a very important thing. It's a very dangerous thing. So if you're always on site, you're able to catch mistakes early on and able to rectify them before you close up walls. So things like that are important. So as much as I would like to just be at a desk, I'm 90% of the time, 4 to 5 days. I'm in my car, working from my car, going from site to site, and whether that's me, whether that's our project manager, whether that's our leasing team, coming in at the tail end of the project to kind of give the building another last check before they go live. Our buildings are constantly being visited by supers, by myself, by everyone.
Mm-hmm.
I think it's really important. It's really, really important. And in talking to our general contractors, I ask them all the time, what can I do to get better? What's the difference between what we do and other operators that you've worked with? And they always say you're always on site, which maybe some of them.
You're on site and you pay them, right? Like, I think
It's very simple. Just pay people
Yeah.
on time. If
Yeah.
they do a good job, pay people on time. And I think that's a problem that I see in the construction and development business. And it's a tricky relationship with a general contractor. As a developer, you always want to think worst case scenario. We want them to be ahead, before I'm paying them. But as a general contractor, well, you need the money in order to mobilize. And what if you run out of money? I don't know that you're not going to run out of money and not going to pay me for my job. So it's building that trust and it's
For
building
sure.
that relationship that really, I think it's been our secret sauce to our success and development is just being personable and having relationships, good relationship with people, having relationships that a handshake means something, paying people on time, and making them feel that you have their back.
Yeah.
That's important. During COVID, it was very difficult to build, very, very difficult. And, they all looked out for us, and we don't forget that. So now when times are good, we're better, we make sure that we allow them also to be profitable. It's not always about just squeezing every contractor for every little penny and making this a one kind of we make all the money and they don't. No, allow our contractors to be just as successful. They're working just as hard. Allow them to make money. If they're going to make a little bit more than you're comfortable, that's fine. You know what? Maybe on the next deal, they'll return the favor because the deal may be too thin. Mm-hmm. And that's helped a lot. That's helped a lot.
It's amazing.
That's helped a lot. Our general
well
contractor
said.
on the deals will say to me, like, David, I'm making no money with this deal. I say, I'm sorry, but with the other 10, you made money, right? He says, I'm like, all right, so I need you to help me with this particular project, and then there's more to come. There's more to come, and it's that relationship that I think is important.
Yeah.
That I don't see the real estate developer operator really try to build.
I mean, your construction definitely speaks for itself. I mean, we're neighbors on a deal. Ours is now much uglier than yours, but
Yeah.
I saw how quick you guys got in and out of a building in Williamsburg. That was
And
3
that-
weeks to gut job,
And
it felt
that
like,
would
or 3
not
months,
ha-
I should say.
And that would not have happened if we didn't have that trust.
Yeah.
Because a banking draw process. It takes time. You have to submit paperwork. They fund you. My team doesn't stop working even if they haven't been paid, because they know that in 2, 3, 4, 5 weeks they'll be paid.
Yeah,
And that is what allows us to build that fast.
it's crazy.
Because most general contractors and most vendors would stop. Rightfully so. They would stop, pay me, and then I'll get back to work, right?
Yep.
Which makes a lot of sense. Our teams, they won't stop.
It's amazing.
Our architect doesn't get paid until we actually have permits. There's no retainers. So what architect would do that? Most architects will need a retainer in order to start working. We close on the building, we get permits, we start construction, and then they get paid. And they've done pretty much all of the work. So I think that that's been part of our secret sauce.
Cool.
Yeah.
Are there any other things that come to mind in terms of like competitive advantages and like I don't know, just what's like made
Within reason, obviously.
Yeah, what's made you guys so successful, or like what's made the ability to like do so many deals and deliver so much product like so seamless? Are there any other things that come to mind in terms of?
I mean, Alex, his hunting skills are unlike anyone else I've ever met.
Really?
I mean,
Well, I can attest to that.
I mean, you can attest.
Can
I'm sure,
I
I'm sure
hear
he
more about
texts you at
this?
2 a.m. in the morning asking you for status on the deal.
I mean, I think a lot of it's just building relationships. I mean, it's the
Okay.
same thing on the construction side. Like, the same way that he's building these relationships with, the architect, the contractor, and showing them that we're constantly active and constantly, going to keep doing deals and execute is the same way on the acquisition side. Someone like Luke or any other, broker, I have, these relationships that I've built over the last 12 years from, starting at RWN when I was there and just, constantly pounding the brokers and seeing what they've been up to and, because everybody's so busy. Everything is, they have a million things going on themselves and it's just constantly checking in and like, people aren't always going to remember to reach out to you and it's just being on top of it and a lot of it's about building that trust because like, if they know that you're active, they know you're going to execute, they're going to want to do more deals with you. And that's a huge thing. And just, a lot of it's the way that we market ourselves. A lot of the, brokerage community knows how much we did the last 2 years and they want to be part of that. So, we're one of the first few calls that they're reaching out to.
I think for you, Alex, it's persistency. I mean, in terms of buyers out there, you're probably the most persistent buyer in terms of how many times you're calling brokers, emailing, emails at midnight, 2 a.m, and it's important. I mean, I talked to our entire sales team today, and I told them how important persistency is. It's the most important thing, I think, in business, and you definitely have that. And
yeah, I mean, look, it's a tough job, right? So there's so many things to go wrong. And so many ways for like other people to think of something else, and like if you're not staying on top of it and seeing it through to the end, like it's not. And I think a huge part about it is just being like adaptive and working hard and trying to figure out other ways to get it done. Because especially in this environment with the difficulties of lenders and raising equity with interest rates where they are, there's so many things that can go wrong from the start to a finish of a deal, and it's figuring out ways whether it's being creative on terms or just figuring out ways to kind of work around the deal and still get it to execution. And I think, we've done a very good job of kind of just thinking on our feet and figuring out ways to be creative to get deals done.
Yeah.
I think another competitive advantage that comes to mind is that joint venture sort of way that kind of like Peak has functioned, right?
Yeah.
Where we've got this team of individuals, everybody's got, their position, and everybody just knows what they have to do in that position, and we just all trust. So when Alex goes and sources a deal and buys the building, he's pretty much focused on something else. Well, and he just hands it over to me, and now that's my full focus, and he trusts that I'm going to do what I have to do. And then when I hand it off to asset management, I trust that they're going to do what they're supposed to do. So it's kind of like handing the building over to kind of putting the ball in somebody else's hand and saying, okay, you take the shot. Now it's your turn. I think that. That's been a huge advantage to us because I've heard that from our investors as well. Say what I really enjoy with Peak is that I know it's not just one or two principals that allege to know everything. And, with you guys, you've got your legal partner, you've got your capital markets partner, you've got your acquisitions partner. If I have a very specific question, I know who to call because I know that individual specializes in that particular area. And that makes a lot of sense. A few of our LP partners have mentioned that.
I'm sure.
That's great. I'm glad you feel that way.
Yeah. Even you just describing it, I could tell it's a well-run, well-organized business, and it sounds like there's accountability, and it sounds like there's a lot of trust, and you have your roles and responsibilities outlined for who's handling what, because there's no way to get as far as you guys have gotten, just like as a 1 or 2 person type of organization. So like you need to have like everything like well thought out, who's doing what. Just talking about this a little further, like how often does the team like check in on like who's doing what, or was like the item from last week handled, and like is there a lot of like getting to?
I mean, there's regular
meeting?
communication.
Yeah.
I mean, we have a WhatsApp group that we're talking, constantly 24/7 throughout the day. We have an acquisition like formal meeting once a week where the whole team, even leasing is sitting in the meeting and just kind of going through what's in the pipeline. What contracts we have out, what is needed to get these deals closed, what contracts we're working on, and trying to get to a point of signing the contract. And then we have a whole section of the meeting that David's going through all of construction. These are the 8 or 10 active projects that I'm working on, and these are the challenges that I'm facing. And then leasing. Leasing will get on and give everybody insight into what they're doing and how leasing is going, because that helps everybody. I mean, by understanding that and the troubles that they're facing impacts everybody's job. So it's really important that we're all constantly communicating. As again, it's a very dynamic business, and everybody needs to be on their toes and constantly adapt to get stuff done.
Really regular
nice
updates, regular meetings. I mean, up until 6 months ago, we didn't have an office. So, that always surprises people. We were running this company, and we bought, 45 or so 50 buildings, out of everybody working from home or working from, their car. So now that we have the office, we've kind of changed a couple of systems, but it's just been, accountability and I look at Alex like he's my investor, and it's my fiduciary duty to make sure that I finish and develop a great project, to him, and asset management says, okay, David and Alex bought and developed a great building. It's my responsibility now to make sure that it operates well, and it yields what we projected it to yield. So it's
So with all these buildings, the plan is long-term hold, or
I think we structured it in a way that there's flexibility, because you can't project one exit, right? I mean, that's too hard. Obviously, in a perfect world, we have this great portfolio, and there's some, huge, recap or sellout, which is certainly possible in the way that we've built the business, going back to the same scope of work, same locations, and building a portfolio that makes sense. But at the same time, we focused on assets that have flexibility. They're great assets in the sense that most of them are tax class protected. They're very highly renovated, low maintenance, low payroll. It's a great, for that kind of one-off buyer that just wants a nice cash flowing asset that's easy to manage. And we try to set it so that, there's ultimate flexibility, because you don't want to just set yourself and pin to one buyer, because then, that's very difficult to execute.
if you guys were to sell an asset, would you 1031 exchange? Would you return capital to investors?
I think it depends on the investor. I mean, we have all kinds of different investors. We have deals that are, private equity deals that are family offices. It really depends on the investor, and we try to, really cater to them, because at the end of the day, they are the lifeblood of our company. We can't, do what we do without the investors. So it really is on a deal by deal basis.
Got it. We should have maybe touched on this towards the top of the conversation.
Yeah.
But how'd you two link up and start Peak?
So, I mean, it started kind of in a crazy way. I mean, I was at RWN, which was, an institutional private equity company, and really was, focused on finding operating partners and buying deals. And David was, a good off-market broker that I knew. We looked at a lot of deals together and, built a friendship and business relationship. There was one deal, actually, that, I wanted to buy at RWN and, kept trying to buy it. It was a funky, retail deal in Soho, 39 Spring Street, that he ended up buying. And I just couldn't, for whatever reason, get RWN to buy it. David ended up buying it, executing on it, and did a great job on the renovation and repositioning. And then, we kind of started thinking, we both had an entrepreneurial mindset and wanted to, buy deals and get into that space. And, it just made a lot of sense, him from an execution standpoint and, my ability to hunt and source deals. And, it kind of just clicked very nicely. And, we started with one or two, and then, it worked out really well. And,
Nice.
and then, really started hitting the ground running.
Amazing.
Yeah, I mean, we bought our first deal together in Sunnyside. I remember Alex giving me a call, saying, "Yeah, I've got this deal in Sunnyside. We should, I found it in New York Times." Let's go see it. We went out to Sunnyside. We looked, and I'm like, yeah, it'd be fun to do it. So just kind of two friends buying a deal together. And then it went well. We syndicated that deal to some industry people, friends, family, that sort of thing, and it did well. And then we bought another one high net worth family office. We bought 3 with them, and then that's kind of when we started realizing, there's, our diverse backgrounds, and we work well together. Let's just continue. And then he was kind of having 2 full-time jobs at RWN, and RWN was gracious enough to kind of allow him to work on this side project while he was there. And I was doing brokerage while developing. And then after the 4th or 5th deal, I realized that it was creating a conflict of interest. I didn't want brokers to think that I was kind of doing the wrong thing. And then I didn't want, at that point we also had, very important people start investing with us. And I felt like, okay, if we're going to do this right, I need to be on the ground. So I can't really do both.
Yeah.
As you know, brokerage, the majority of the time you're calling, you're at your desk, and development, you're on the ground. So I found it very difficult to juggle both, and then decided to pivot, and I guess the rest is just kind of history.
Nice.
And that's the hardest part, right? Because in the beginning, there's no real money coming in, and you're kind of taking a huge leap of faith. So you just really got to believe in the vision of the company and the partnership. And I think that's a huge, you have to find the right partner if you're starting out. Like I would highly advise to any, young entrepreneur or anyone, like you got to find a partner that complements you, because otherwise it's like neither of us could probably do the whole thing on our own, because it's just impossible. There's multiple parts of this business, and you need somebody to, you can't be good at execution and on the acquisition side, in my opinion, and you really need someone to focus on each side of the business.
Did you guys know that you'd complement each other so well, or do you think it's kind of like you kind of evolved into the roles and took on different levels of responsibility as you kind of identified what needed focus?
Yeah, I mean, I think it kind of just naturally happened based on our personalities. Like I'm, as he said, just very persistent, and, I have very much of a hunter's mentality, and that kind of, just pushed me into that role. And David's just very, diligent and organized. And I think that kind of led him to more of that construction operations role.
Yeah.
And it just kind of happened naturally based on our personalities. I mean, as I said in the beginning, it was like, we both wanted to be the deal guy in the beginning, because it's the sexy thing that, like, you want to be buying everything. But then at a certain point, you realize, like, if you're just going to buy a million deals, it's not going to last very long.
Yeah.
You're just going to become a trader. And then ultimately, you're not going to build a real institutional company that, become a real operator. And the goal for us not to continue to do, $2 to $3 million deals. We did that deal in Gramercy that was a $25 million deal. And the hope is, we continue to do $50, $100 million deals and really grow Peak into, a much larger platform.
Do those deals, like obviously we know your business plans, buy mostly vacant buildings, do these amazing renovations. Does that product exist for $50 million deals? Like what would that look like? For me to envision it, maybe like you redo like a warehouse into some big conversion deal, but I don't really see how it looks otherwise.
I think, it's definitely harder. There's a lot more competition for those deals, because you're dealing with, more sophisticated buyers, and there's a lot more people and capital in that space that wants to put money out. So it's different challenges, and finding the right capital sources, finding, unique abilities to take down those larger deals, because everybody wants to do bigger deals ultimately. And that's something that we've kind of managed, for our business, is because we don't really want to give up the whole tax class 2A, 2B stuff that makes a lot of sense to us. And we want to continue to keep doing those deals, but also position ourselves so that we're available to do these larger, more opportunistic deals when we see that make sense. It's been really hard to find large institutional value add in New York City. It just hasn't really existed, as much for the last few years, just given where the market's been and how competitive, capital markets have been in New York.
Yeah, and it's making our, it's about also making our partners just feel more comfortable with our process, right? A lot of our partners started off with us doing, 6 to 10 unit buildings, and now, it's 50 unit buildings. So it's them feeling comfortable with our process, knowing that we're going to be as diligent, knowing that we're going to deliver, we're going to work as hard. So, as we continue.
A lot of it's organic growth too. Like we started with these, 6 to 10 unit buildings, and I've done now 56 of them. So, we've built a lot of just organic trust, with our partners that, maybe these guys can scale to the 10 to 20 and then 25 to 50 and then hopefully 50, higher.
Do you guys see a big difference in it? Like, I know you guys did India, Manhattan, that corner piece, and then you bought like a 20 unit on North 6, I believe. Is there a big difference between that building and a 6 or an 8 unit in terms of renovation and doing all the work?
For me, the difference exists on whether the building's tenanted or not tenanted, right?
Well said. Yeah, I agree.
That's a tenants are a challenge, and they just require a lot more charm, a lot more diligence, a lot more hand-holding. So whether it's a 6-unit building or a 50-unit building, if there are tenants, you just have to be proactive with developing those relationships with those tenants, whether you like them or not, whether you're happy that they're staying or not. If they're going to be there while you're doing construction, you've got to make it a point to protect them. You've got to make it a point to make them feel safe, because otherwise they can make it very difficult. So I think that for me, that's the biggest difference. It's not the size. I mean, the construction process is the same exact thing. Gutting one apartment, gutting 10, gutting 50, gutting 100 is essentially the same thing. It's whether you're working around tenants, or not. And obviously, DOB is a constant hurdle that you have to work around. You guys know that as well. So, being on site for when DOB shows up and being an owner on site, that sends a message to DOB, oh, this guy cares. We're not going to give him such a hard time.
Interesting.
Yeah.
That stuff matters a lot. I can't begin to tell you how many times we haven't gotten violations because I'm on site. And, no, it's me. I was just here. We forgot to put that cone here, or this or that.
Wow.
Or turn on the light. The cleaning lady's on her way to clean the hallways. We understand there's a tenant there, and a lot of them they understand, and a lot of them when they issue violations, they'll tell you, listen, I'm sorry that I'm giving you a violation. I don't want to give you a violation. I know you're working hard, but there's other people that are looking at my work, so I need to do my job. And a lot of times they won't issue violations if you're there and you're present. And with a one or two founding team, it's very tough to do that.
Yeah.
It's very tough on a larger scale.
For sure.
To build it on a larger scale.
Mm-hmm. Are there any other challenges you guys are coming up against in the market? I mean, you mentioned dealing with tenants in a project. You mentioned DOB. Are there other things that you find challenging? I mean, obviously we're in a rising interest rate environment.
I mean, rising interest rates are an obvious one, which makes equity much harder to raise, in general, just because, it's harder to show cash flow. Obviously, there's no, at the moment it's very difficult to sell buildings. So, cap rates are very high, obviously. So it's hard to show an exit, and it's also hard to show a cash out refi. So that's a huge challenge. And, not only that, there's obviously a lot of local problems that are challenges, whether it's, rent regulation, now that you can't, do IAI improvements. They're talking about getting rid of unit combos. They're talking about changing sub-rehab. There's a lot of things that are getting more challenging. You can't evict tenants if you have issues. So, it's a lot more diligence that needs to go into deals. And as we're pricing these deals, we're just being very careful about making sure that there's enough conservative assumptions that we can kind of live with the high interest rates and that we can build to a return that's commensurate for, buying deals in this environment.
Yeah.
Like, we want to continue to stay very active, and this is really the time you want to be buying when deals are cheap. You can get really good basis, but you need to make sure that you're accommodating for the higher interest rates and higher exit cap rates.
Yeah. And so you just mentioned now is the time to be buying, but through all the challenges, there's always challenges, there's always obstacles. Do you see any major opportunities in the current market? Is it just that cap rates are higher and prices are lower and there's not as much easy equity, so maybe you have a competitive advantage there?
Yeah, I mean, look, I think as long as you can find the right opportunities that make sense with those conditions, I think there's a lot of opportunity in the market. There's not, the same deals that we used to have 6, 7, 8 competitors, we're now seeing 2 or 3. So there's a lot less competition in the market. If you can find, the right investors that are willing to, buy deals right now, and kind of work around the challenges that we're facing, I think it's a really interesting opportunity. We're long-term believers in New York.
Yeah.
We think this will subside, in the next couple years, and we think as long as you have a long-term vision and can work with the challenges, we think there's a lot of opportunity in the market right now.
Nice.
Agreed.
Yeah.
Yeah, we see a lot of young people moving into our buildings too, which is a good sign that people still want to live in New York. And I think
Where are they moving from?
A lot of people are moving from out of state.
It's great.
Tech jobs, a lot of tech people out of college moving to New York. And I think that's just a good sign that New York's going to continue to thrive. So if we can provide good housing, then we should be okay.
Just to talk about these people that move to New York from out of state and they move into the free market environment of the market where we've seen the rents just go up so much. And I don't know, I mean, do you guys have any thoughts on just like all the rent stabilized units that essentially were taken off the market now that there's no IAIs and the rent growth we've seen in the free market aspect of the market? I don't know, I just feel like there's not a lot of product for people to move into. And then they come to New York and you guys have this unbelievable, beautiful product, but they have to pay a good amount for it, and it's, I don't know, just with the lack of supply in the free market space, it just makes it hard for that tenant profile.
I mean, that's one of the things that has given us a lot of comfort as well. I mean, there's a huge supply problem in New York, so there's not that many units that can be gut renovated into nice product, and so when we deliver a beautiful apartment, there's not as much competition because you have no new development, you have no rent regulation turnover, so that gives us a lot of comfort that there's going to continue to be strong demand for
Definitely.
Any supply that we
agree.
deliver. And it just feels like that has to change at some point because there's just gonna too much tax revenue that's being lost by not having rent regulated units turn over. And I think as this continues to become a problem where landlords are just, holding units vacant, it's going to have to be addressed at some point. And historically, there's been, different pendulum shifts of how the city kind of changes their outlook on this. And I think at a certain point, it's just they're going to need to do something to create more affordable housing, whether that's changing, development and tax incentives or changing the ability to renovate these units that are just essentially defunct. And there's really no incentive for someone like us to put capital into these units and renovate them if we're not going to see a return. Like why would we do that? Why would anybody do that?
And there's no avenue to do it. I mean,
Right.
sub-rehab may be the only one, but there's a lot of requirements to that, as we all know. So like what else? There's no way to renovate an apartment otherwise.
Yeah, and I think the biggest thing is creating more just clarity in the market. It's not even as obviously we hope it goes more in the landlord's favor, but people just don't know a lot of what's going on right now. People don't know whether sub-rehab is going to stick around or whether unit combos are going to stick around. And there's a lot of these things that are just so unclear. I mean, we have conversations all the time of like, what exactly, it's just very, like, there's a lot of ambiguity to a lot of these things. And it's just like, we shouldn't be investing millions of dollars, into these buildings and not knowing, what's going to happen. And I think if, the political environment can give clarity on some of these things, I think it will help a lot of, landlords start investing more into these buildings, if they know that they can, see a return by doing so.
Yeah. Uncertainty is a bad thing. No one knows where rates are going. Okay, uncertainty. Or the law is gonna change. Uncertainty. I mean, those things hold investments, and it's scary.
Yeah, I mean, that's the biggest thing we've seen from investors, and not necessarily that the rates are high, which is obviously that's a concern, but it's something that you can work around if you knew where the rates were going. The biggest thing we hear from a lot of our investors is they just don't know where the world is going. This could get a lot worse, and that's the biggest reason to give them pause because they just don't know, have clarity on where rates are going.
Yeah, for sure. I mean, there's always uncertainty. We were speaking before we started recording this, and now you guys are buying in COVID, and there's so much uncertainty then. I mean, that was scary times. There's no clue where things are going, and you guys were buying. It turned out to be a really good time to buy, and it's just weird how you never know where you're at in the market. If it's a good market, a bad market, good buying opportunity, and where it ends up.
Yeah, a lot of things to work through.
Yeah.
But then if
For
it
sure.
was easy, then
I think
a lot more
it was
people would do
easier.
Yeah, exactly.
The easy part for us is that we had conviction long term in New York. I mean, at the end of the day, it's
Got
a
it.
gateway market where people are always going to want to be. It's the best place to live, eat, hang out, and there's always going to be demand for people that want to live in New York City. And I think, as kind of born and raised New Yorkers, that was kind of an easy kind of bet for us.
Yeah.
But yeah, you really have to have conviction, especially in uncertain times like this.
It's something that I found really interesting recently speaking to our leasing team, and I was asking who's leasing our apartment, what's the demographic like, and this sort of thing. I remember when we bought our first 2, 3 or so buildings, we had our demographic going after the 25, 35-year-olds making 80 to 120,000, works in the city, wants a little bit more value, a better apartment, they're going to move to Queens. Now it's fresh graduates getting out of college making $140,000 to $160,000 a year, and that was mind blowing because my mind was still in that 80 to 120,000. I thought that was kind of like what you make. Now people out of college are making $140,000 to $160,000 a year on their first job.
Damn.
Coming into the city. So I'm like, okay, no wonder they can afford these rents, and that kind of makes you think like, what? Okay, if that's the new baseline, then there's room for growth, or it's.
Yeah, I was just also going to say, I think a lot of people, there was this whole, it was a big concern for a lot of people in New York that everybody's moving to a lot of these southeast kind of, high growth states where it's cheaper to live, or, just there's not as much taxes. And I think people are just starting to realize that it's not as like cool and fun as living in the city. And there's a certain character to the city that's really not going away. And it's a living, breathing, amazing thing that I think young people want to be. And you're kind of seeing a whole new, I don't want to say revolution, but there's like this whole new class of young people that want to be in New York. Mm-hmm. And I think, that is going to continue to see growth in the city as people just, realize it might not be as cool to live in a lot of these other kind of high growth markets that you have in New York.
Yeah, and these markets we're talking about, like a Williamsburg, for example, I mean, there's still tons of growth there. I mean, we were talking to a client the other day. I mean, he's like, I got my first 7-figure tenant in Williamsburg. Like, the guy had, I think he made like 7 figures a year or whatever it was, and that was a big deal. And, like, you probably see that all the time in Manhattan. But Williamsburg, as cool as it is, it still has the growth, and people really want to be there. And it's exciting that you guys have so much exposure to those markets, like a Greenpoint, Williamsburg, because it's going to happen. It's happening.
Yeah, and now that we have our office there,
great location.
Rabin, thank you, and it's great location. We're very happy to be there.
Yeah.
But now that we're, we spend a lot of time there. We go eat lunch there. We go to dinner, and just to kind of feel the energy and see what's going on. There's so much room for growth.
Yeah.
I thought that Williamsburg was kind of topped out. Like, okay, like that's it. Like, too late. No, there's just so much growth in the energy at night, and I mean,
it's not topped out. Like
it's incredible how
yeah.
much growth.
Yeah.
There's
There's definitely room.
Greenpoint. It's wonderful to see. It's great to see.
Yeah, I think Williamsburg Greenpoint, I say it all the time, but it's the most undervalued, like, hot market right now, where you can still get opportunities, still a ton of rental growth. I mean, you look at markets like Tribeca, Soho, the West Village. I mean, rents are still much higher than they are in these other markets. So that tells you that there's real growth. So there, I mean, that's what I feel like.
Yeah.
I mean, Tribeca, like a $12,000, $14,000 rent is not uncommon, and it's not even that great of product. I mean, I remember when people were performing like the loft space in South First and Barry and Bedford of 8,000. I thought that was crazy, and it's not. You compare that to a Soho or a Tribeca, and it's not. There's room. Still a lot of room.
But I think it's just people want to be there. It's not even like it's not even a price comparison for a lot of people. Like I think Williamsburg is just a different lifestyle that people want to be in. Myself, I moved from Tribeca to Williamsburg just because I thought it was just a cooler lifestyle. I mean, and it's a little bit more relaxed. There's more kind of restaurants and things going on. Yeah. You kind of see a newer generation almost
for sure
there than a lot of the kind of downtown neighborhoods that have kind of been. It's become a lot of transplants versus kind of Williamsburg that I think is like a newer generation.
I agree. And there's a divide too. Like parts of Manhattan, it's unattainable. It's too. The townhouses are $20 million. The apartments are $7 million. Like who could afford that? You could still get real space in these Brooklyn locations, and Williamsburg's just as good, if not better, than these markets. For just talking about that one as an example.
Yeah.
Yeah. All right, good. I don't have any more questions. I'm not sure if there's anything else you guys want to cover.
No, I don't
I'm
know if
good.
you want to talk more about the sub rehab stuff, which you mentioned. I'm not sure if there's anything else we can add.
Well,
you know,
I mean,
if that's
Alex
the uncertain
mentioned that
factor.
that there's just a lot of uncertainty. Do we know
Yeah.
when there's going to be more clarity around these combo units, or so it's just hanging out in the air?
I mean, I think it sounds more certain about the unit combos, but
Yeah,
a lot
that
of
does
it's
sound certain.
a lot of it's
Which makes
unclear.
sense. I mean, the attorneys have said they were supposed to make a decision by like November or something, and they keep kicking it. Now it's middle March. I mean, is there a time limit? But we get a lot of calls, a lot of questions about sub rehab. When they're going to come out with it? Obviously, you guys are probably not just some of the biggest buyers in New York right now, but you're doing a lot of this type of work. So it'd be interesting to get your stance on this. I mean, you're not
I think
stopping.
the biggest thing for us on the sub rehab is we've never really focused on the vacancy presumption, and the biggest thing for us has been focusing on buildings that really are substandard and putting in the processes of making sure you're doing everything properly. So everything from buying the building and diligencing that there was no harassment at the building, that it actually was in fact substandard, and showing that it was substandard, and then just being very diligent throughout the construction process that you're really complying with everything that is required for a sub rehab. So really going through that list of 17 items and making sure you're really addressing everything that needs to be addressed, and having records of all this stuff.
Yeah.
Because at the end of the day, people aren't buying buildings based on just telling them that it's free market anymore.
No, they're
It's
not.
so much more important to have your paperwork in a row, and that going back to the difference of value really impacts things today. And today might just be the difference of selling a deal or not selling it.
It absolutely could be.
Yeah.
But you guys, listen. Obviously you don't want to go out and be like a cowboy and do crazy things, but you also there's rules in place, and I think a lot of buyers, they hear the news and this and that, and they get scared and they don't do it. But I also don't want to make a bigger issue than there needs to be, and I think you guys do a good job about sticking to the rules, sticking to the guidelines, do your thing, invest money, and that's opportunity.
I think at the end of the day, this is a risk business, right?
Yeah.
If you're taking no risk, you're not doing deals. So you just have to be it's all calculated risk. You can work within the guidelines that at the time, and you got to do your best to make sure you're getting paid for the risks you're taking, and not taking too much risk. And that's all that you really can do at the end of the day.
Yeah.
Yeah, and we've just had phenomenal partners, throughout the last few years too, that believed in our thesis and our process. So I think very grateful to them that were willing to take, or still taking risks on the sub rehab and on New York City multifamily with us. So it's
I think it all goes back to trust, right? It's like we try to build trust in our vendors, and our partners need to build trust in us, and they need to trust that me and David and Peak in general is on the ground and keeping updated on all these kind of things that are dynamically changing.
Yeah.
And they're trusting us to be their local expert, and really believe in us.
Yeah, and if they trust you, you're transparent, you tell them as much as you know, and there's a level of risk involved in the business, and there's not much more you can do.
Yeah,
Exactly.
You can always find a reason not to make an investment. It's really easy not to talk yourself out of spending money on an investment. So it's good that I think you guys are doing the right stuff. I really do, and it really shows. And obviously, you guys are extremely busy, and we really appreciate you guys coming in.
Yeah.
Thank you.
For sure.
Yeah, this has been
this is
a
awesome.
great conversation.
Yeah.
Really enjoyed hearing about how you guys built the business and the different pieces of the business, and love what you guys have done, and congratulations on
Thank you.
all the success and all the acquisitions. It's been just amazing to watch. Nice hanging out with you guys.
Yeah,
Yeah.
same here,
Appreciate it.
guys. Thank you
All
so
right.
much.
All right.
Thank you.
I don't-